All right, welcome, Oltin. I'm really excited to have you here. Thanks for taking your time. My goal here is to do a market update, of what's going on in the real estate market and the mortgage market. Always exciting to hear what professionals like you have to say. Oltin, you work for the Verano Group. Tell us just a little more about yourself for those who don't know you, and how long you've been in real estate, and yeah, just a little about yourself.
Sure. So I recently moved to Needham, Massachusetts. So I've been here for 6 months. I used to live in Chestnut Hill before. I loved it. Needham was a move for my wife and I because we had a baby last year. So we thought,
Awesome
could
stuff.
go into a better school system, etc. But yeah, in real estate, I started 6 years ago. I started as a real estate investor. Uh, I started in the Worcester market buying small multifamilies. And 3 years after that, when I was done with my MBA at Babson, I basically didn't know whether I was going to continue in my corporate route or whether I was going to go on my own. I decided to go on my own. I got my real estate license and I've been an agent since 2017 and I've loved every day. It's exciting, challenging, but one thing it brings me is I don't get bored and stuck in one cube as I was before. So that's very exciting for me. Um, so yeah, 3 years in, started as a part timer, been doing it full time for about 2.5 years. And right now, as you said, I'm with the Verano Realty Group. We're based out of Needham.
That's awesome. I think that's plenty of experience starting, with investing yourself and then getting your feet wet. And I've had the pleasure of working together. But what areas do you? I know you don't. I know Worcester is one of your markets that you serve. What other areas do you serve? And if we can talk also expand it a little more on how is your business changing lately with COVID-19? Yeah.
Yeah, so Worcester, I would say primarily I work there with investors because I know that market since I invest there myself. In terms of single family, first time home buyer, and sellers, I try to focus more local where I am. So I'm doing a lot of Needham, Dedham, Westwood, Natick, Newton, but really anything that's like a 30-mile radius from downtown Boston, I've covered. I think first 5 years in real estate, you're trying to go to markets that people bring you to. But right now, I've been trying to focus more local, like Needham, Dedham, Westwood areas. Um, yeah, and in terms of COVID, I mean, that's been kind of the question that I get pretty much every day from clients and other folks. We definitely saw an impact when the shutdown started happening, and we had some challenges with open houses and things like that. We had to change that up into more virtual tours and by appointment only showings. But I mean, I would say right now we're experiencing what we would have in the spring. Basically, the spring market has shifted in the summer, so we're seeing a lot of activity, um, a lot of offers in 10 to 15 offers sometimes. So it's been quite active.
I've heard some crazy stories. I mean, the markets are really strong at the moment. I mean, my opinion is we had a, a big pool of qualified buyers that were waiting for spring market to hit, and now all of a sudden they're all competing with each other, and there's less inventory for multiple reasons. Um, but it's yeah. I mean, in terms of COVID, are you doing a lot more like Zoom calls, or how is it impacting like your open houses? Uh, are they taking longer? Do you have to do like one at a time?
Yeah, so when we're doing open houses right now, we're trying to limit it one group per 15, 20-minute time frame. So let's say there's like two people or two groups that show up at the same time for the open house. We post a sign outside the door that says, if there's someone in there, please wait your turn, basically. So we try to limit it, one family or one person per showing because, there's still that fear and we don't want to, us as agents get in trouble, but we'd also want the
Yeah,
population out there to stay healthy. So
of course, we want to make sure that yeah everyone's staying healthy. Um, for those people that are saying, well, let me wait a little longer, the market's going to slow down. Where do you see the market maybe in the next 6 to 12 months?
I think, I mean, the answer to that is it depends. I because there are always different segments in real estate. There's segments of what market you want to be in. For example, comparing a Worcester to a Newton is very different. I think uh, personally, my thoughts are some of these less powerful or less robust markets, such as um, Worcester County markets, where individuals don't have these, super high salaries and may be in danger of potentially even losing a house due to, forbearance ending and things like that. I think those types of markets where employment may be impacted a little bit more uh, could see some sort of a slowdown. How much? It's anyone's guess. It could be 10%, 15, 20% fall. But at the same time, we have to remember that as of right now, mortgage rates are at the
Yeah,
lowest. So will they be similar to when we see a potential price depreciation? Maybe, maybe not. So I mean, there are many variables when looking at overall value, right? In monthly costs. So um, yeah, to answer your questions, there's different variables. I think we may see something due to this whole unemployment forbearance thing going on in stronger markets like Newton, Boston and things like that. We're not going to see much, I think, because people in those markets typically have high paying jobs
very true.
and or a lot of savings or investment accounts, things like that. So I think they're going to weather the storm easier
Yeah, or even
versus
equity in their
people.
houses too, meaning
Yeah,
that right, right. So they wouldn't have to go through a normal like foreclosure process. They could still just list the house and sell it. But I totally agree with, there's 4.5 million, I think, in forbearance, which is like 8 point something percent of total mortgages out there. So we will see, I think, some activity in the foreclosure business. I would say, 6 to 12 months, or even after that, when these forbearances start ending, and when some of these borrowers have to make a payment. But one factor is, if values remain where they are, I mean, the equity of these houses will still, there still will be a lot of equity, which is good because the houses won't be underwater. And we could see a flood of houses in the markets for sale. Personally, that's what I think. But we'll just have to wait and find out.
Yeah, I mean, those are my thoughts exactly. But I think, again, it's also going to depend on the market. I mean, I think some markets may see a flood, but some may not, you
Correct.
know.
Correct.
I
Exactly. Like
think,
an area like
yeah,
Edom, I don't think you'll see a lot, or
yeah, Needham and Newton, I mean, just because, they they fly off the shelf, there's a lot of demand in these markets. So, um,
yeah. And
but I mean,
if we go back to like the 2008 2009 crash, like you had areas like Cambridge, Newton, Needham, Lexington, where they didn't see even a fall. I mean, the prices flattened out for a couple of years, but you didn't have like a drop in real estate prices. So we'll have to wait and find out, but that's very awesome insight. um, as a real estate investor, in multifamilies, or just, for people looking to invest, what do you think, like, could be some hot areas or areas, to keep an eye on for the next few months or so?
well, I think after the forbearance period, I think it'll be interesting to track these like sub markets. So, sub markets that have a decent population, like Worcester. I mean, Worcester, for example, is the second highest um, population in New England, I believe.
Interesting.
Um, but looking at prices there for multifamilies, for single families, um, it's much lower than you know anywhere near Boston. So
Absolutely.
I will be tracking those markets myself. I mean, I'm an investor in Worcester right now, but I kind of want to see how prices um, get affected after the forbearance period because uh, as an investor, I mean, it's all about the numbers, right?
Of course.
I think if you know one particular area, like I know Worcester very well, but someone may know Brockton very well, or someone may know Fall River and New Bedford very well.
Right.
If you know the areas well and you know how those markets behave, if the numbers make sense after the forbearance, I think that's where investors should focus in. Sometimes, it doesn't really matter what period of time you're in as long as your deal makes sense.
Exactly.
So there are multiple variables that you have to look at, not just price sometimes, right? It's also how much is rent, um, you know, are people vacating too quickly? Vacancy rates. Um, there's so many variables. I could go on and on, but I think it's good to track the numbers after the forbearance and then kind of do your underwriting and calculate your deals to see if it makes sense.
For sure, for sure. Yeah, we're all waiting for more inventory in the markets, hopefully.
Especially multifamily. I mean, I think that's
Yeah,
been the challenge for many investors because you know, as an investor, I feel like it's a much slower growth when you try to focus on like condos and single families. Most investors will want like the multifamily purchases, like 3 family, 4 family, and higher.
awesome stuff. Awesome
So
stuff.
inventory in that has been very challenging, unfortunately.
Yeah, yeah. No, we'll have to wait and find out, but yeah, I think a lot of folks are waiting on more inventory. But we know how hot the market is at the moment. Um, my last question to you is, for first-time home buyers, what would you recommend, or what is your advice? If someone like me today is a first-time home buyer, what would you tell them?
Yeah, I think we touched on it a little bit earlier. I'd say as of right now, as a buyer, it's a very good time in the sense of mortgage rates. So even let's say you wait a year or two and prices have fallen by 10, 15% in a particular market that you're looking in, um, we can't guarantee these types of rates a year, 2 years from now. I mean, um, could they go lower? Maybe. Nobody knows that. I mean, we don't have a crystal ball. But historically speaking, I mean, rates at 3% average for a 30-year mortgage. I mean, it's a super deal, right? So, in terms of a new buyer for the first time, take advantage of that, but also expect a lot of competition because of that.
Good point.
We talked about earlier. I mean, market is very hot right now, so patience and not being disappointed are also key because you may lose the first or second offer, that we put in. So those are, I think, the best tips I can give.
Yeah, great. No, that's awesome stuff. Yeah, no, one last comment regarding like rates and where the mortgage market is at the moment. We're definitely seeing all-time low rates, in the low threes, averaging in the low threes. As you said, we're expected to see lower rates for the next couple of years, but things could always change. We can't expect rates to go any lower, but they could. It's definitely a great time to buy in that sense because of 1% could be a few $100s more in mortgage payment. So even if a house falls by $100,000, you're still looking at a $500 less in payment. So the difference is not much. But hey, I want to thank you, man, for taking time out of your day, providing some great insight. I'm sure we'll get to do this again. We're doing more and more Zoom, so this is very exciting. And yeah, thank you so much.
Thank you, Sidrit. And for those of you watching, don't hesitate to call us, text us, email us.
Well,
Sidrit and I will take care of you. And it's nice because we also both speak Albanian. So any Albanian speaking clients out there, please reach out to us and we'll take care of you.
of course. Thank you, Oltin.